got some more room on the downside. Now, the stock markets have actually been working really well. The DAX has been a little bit confusing. Right, you may remember, what was it now? Well, beginning of July, really. I talked about the stock markets having a good recovery. The Dow Jones and the Nasdaq had hit big important support levels, so I expected them to bounce. The S&P had not hit a big important support level. In fact, the S&P chart looked quite negative, but because the Dow chart and the Nasdaq chart look so positive, I expected a bounce back in all of those markets, and we certainly have seen that. Now, what am I going to try and do here? So again, DAX is bouncing nicely. Small double bottom there, which we spotted a while back, and that also suggested that we would get a recovery. But the real reason I thought the DAX would recover was because I thought it would get dragged up by the US markets, and it has, but it's been a painful process. It would have been very difficult to run a long position because we really have had some deep pullbacks. Anyway, we've managed to get to my resistance level at around 13,750, 13,850. Where did I get that from? The blue 100-day moving average and the 61.8% fib. Now that worked really well. Last week we backed away we really did back away, didn't we, from that exact point. So if you were selling the DAX up there at my resistance level, well done. We've got overbought, and we are in a bear trend. So sooner or later, I think this bear trend will resume. I do see this as a bounce in the bear trend. I mean, there's all sorts of shenanigans going on in the US, in the German economy, in there with energy supply and whatever else. So watch for this break to the downside. Pretty clear. 13,550, 13,500 is the support level in the DAX right now. You've got that on your report anyway, or if you're watching this without being a subscriber, make a note of that level. My first support level is at 13,550, 13,500. My first resistance is at 13,750, 13,850. We'll see where we travel in between. Maybe we'll just scalp around in between those two levels before the CPI number on Wednesday, which will then give us some direction for stock markets. But it does look like it's probably a bear flag, as we're seeing in some of those dollar markets as well, in fact, and then eventually a break to the downside. I'm going to show you the FTSE. I do cover the FTSE every day. I don't know whether who out of you guys trade it, but actually the levels have been working really well. Now, when I look at this daily chart, I wonder how the hell I managed to get any decent levels out of this, because it is a mess. But it does look quite positive. We've got up through the moving averages. We are in a bull trend. I don't see this ending yet. We are overbought on the daily chart, but this isn't a strong bear trend. So it's just quite interesting. Anyway, the FTSE levels have been working, and if you haven't been trading them, it's worth keeping an eye on them if you like the stock markets. I think it's fair to say that the S&P trades have been going pretty well lately. Not been easy. We didn't get a strong bounce off that level like I thought we would, and this was a little bit confusing for me, I will admit. But once we got up through the 39.15 area, that was an obvious trigger for the market to go higher. The prices even kindly came back and retested that support level and then took off. So this is where it got interesting for me with the S&P around mid-July. So for about a month now, we've been doing quite well in that. Broke up through that was my target, 40, 80, 40, 90. Now, if you've been watching my webinars, you'll know that was my target for the S&P. We got through it, and that is now acting as support, as you would expect it to do once we broke above it. So I think we do have a platform for the S&P to continue higher. Doesn't make a lot of sense, really, when you think about the economy. Okay, yeah, the employment number is doing okay. Average earnings are doing okay, but it's all very inflationary. And I think it will all end in tears. But for now, I think that the stock markets can continue higher, and the S&P certainly look. Friday, we dipped to my support level. I had support level at around 4,100. If you managed to jump in, that was really nice. We've already had a 40-point bounce, and I think eventually we will push up through 41.73, which was last week's high. Yeah, I feel quite positive about that. We will get some sell levels in the stock markets, and I will put them in the reports where I think we should be getting short. But for now, the Nasdaq has had a good run, as expected. We have got up through the 38.2% fib. We're trying to push above there. If we can just get through this trend line, which goes back to January, so this is the 2022 trend line, if you like, that comes in at 13,333, according to this chart. So we really do need to break above last week's high for a buy signal. 13,400, we can get up through there. We can jump quite quickly to 13,650. We'll see what happens around there. Quite a good resistance level. As I say, I don't think this stock market recovery, I don't think this is the beginning of a bull trend. I think that it's a nice bounce in a bear trend. So ultimately, I am looking to sell into shorts and see the market turn lower. But for now, I think we can continue higher. Actually, on that note, I've been working on developing a robot to trade my signals, the ones that I put on the cheat sheet. I'm actually working with someone who is way smarter than I am, and he is working out how to program my cheat sheet, and so far the results are pretty amazing. We're looking at something between 30 and 50% a month. Last week was a tricky week, but we were looking at a 7% return on the model. So I'm going to hopefully be releasing that around September. So keep in touch with me if that's something that you want to get involved in. Pretty much just stick your money in an account and let the robot trade for you. The robot will obviously be trading the levels that I manually pick, that I hand pick myself in an exercise like this, but you won't actually have to trade it yourself. Okay, Dow Jones getting tangled up in the moving averages. Again, I think we can probably push higher. I think this is just one of these consolidation patterns that we see when the markets push up. I think eventually we will get up. Now look, 34,000 would be a real nice target. 33,800, 34,000 would be a real nice target, but there is a lot of resistance up there. So we'll examine that maybe next week in the webinar. I think that's it really. I'll have a quick look at crypto. As you know, I've been